Comments from President Trump that he believes the war in the Middle East will be over soon and that the US is ahead of its initial timeline of 4 to 5 weeks has sparked a strong reaction in the market. Oil prices have tumbled sharply. So after spiking to an almost 4-year high of $120 the barrel yesterday, we've seen oil fall sharply to below $90 the barrel at around $85 the barrel at the time of recording. As a result, we're also seeing bond yields falling across the board and equities are bouncing as sentiment improves. Now, obviously, shares in Europe are proving to be bouncing the highest as expected, given that they've seen that steeper decline on those concerns surrounding energy prices. However, we are seeing a more muted reaction in the FX market. The US dollar is modestly lower as we're seeing some unwinding of those safe haven flows that we've seen in recent days and weeks. As far as sentiment is improving, just on expectations that the Middle East war could be over soon, and this is even as Iran's military signaled that it would continue fighting. I mean, Trump's words have actually sparked quite a significant unwinding in oil and energy prices, and that's helping to ease those sort of inflationary fears that we've seen rising in recent days and lifting sentiment. However, I think it's worth noting that these moves really do highlight just how much the market hangs on Trump's every word at the moment and how much market action is being directed by headlines, which does make it very volatile. I think it's also worth noting that we're definitely not out the woods yet. Any gains are potentially going to remain limited until we actually see clear signs of an end to hostilities in the Middle East and in the Gulf, and clear signs that shipping through the Strait of Hormuz is improving. So that's what we're going to be looking out for. I mean, whilst the DAX, for example, has recovered, it still remains around 3 months lows, just to give us some context of where this bounce is. And while stocks are rebounding, I think it's also worth noting that there have at this moment been few fundamental changes with no resolution sort of firmly in sight. So volatility is likely to remain elevated as we sort of get more headlines through. But what the market is going to want to be seeing right now is that sort of, there is a de-escalation on the ground, fewer attacks, and that Strait of Hormuz that we've been so focused on over the past week or so starts to see ships transporting through it once again. For more videos like this, please do like and subscribe.